Well, hello, this is Mark with Quantum Forex, Senior Trader and Educator, and I want to do a little series of videos here. We have a trade set up. I want to show you why that's a setup, and then we're going to track this trade through to the profits and through our multiple trade management exits and our take profit exits. I'll just give us some brief teaching as well as some visual demonstration. What you're going to see is some of what we use in the beginners, intermediate, and advanced course to take trades, make pips, and if you get involved in our course, you'll learn all this stuff in detail. But it's just kind of a free video that you can see if you're interested in what we do, and you can see how effective it is. Okay, so we have not entered a trade yet. Our balance is $3,026. This is a demo account. We're entering here. I want to show you on a daily. We're actually dealing with a bit of a range-bound channel trade, and this particular setup we go over, and we have a system for it in our beginners course. It's our advanced beginners course system, which is the channel trading system. You can see how on the daily the pound dropped down, and if we were to pull a fibble, you'd see this was at the 38% is where it hit this bottom range, this bottom channel, and then it bounced. And it's been nicely going between the 28 and the 23% and 38%. And those are typically can be some fairly strong support and resistance. So what we've done, we've come down, we've been bouncing off of the 38, and now we're back up and touching, just about ready to touch the 23%. Let's drop down to the 4 hour. We'll see this a little more clearly. You can see 237 pips on that move, 241 pips on this move up. So we kind of have an A. Let me draw this in for you here. We have an AB for those of you a little more of an advanced trader courses. We do learn this in our advanced course. AB equals CD. That's a harmonic pattern. And interestingly enough, it is ending right up here, right around the top of our range at the 23%. Now I'm going to show you a fibble level. If you pull a fibble back from the 2 point to the 1 point, notice that top of that range there is 127%. It's also the overall 23%. So that is a very high probability turnaround point. Now I'm going to drop down to the hourly and show you again why we're favoring this area. If you notice a 1, 2, 3 point going up. I'm going to pull a fibble there. Notice we're also right in here, the 161 to 178% zone. We can go ahead and even draw a rectangle right in here. Okay, so we came right up, it bumped the 161, pierced it, and now we've opened below it and possibly heading down. Notice we're at the top of our stocks, right there at the 95. We don't currently have the divergence on the hourly, but because this is quite possibly an ABC setup, we wouldn't necessarily see divergence on an ABC. We see divergence on the 1 through 5 Elliott wave impulse moves. Let's go down to the 15-minute chart. Now here we are seeing some divergence. Notice right in here, momentum oscillator is going down, and the candles are going up. So we're looking for this is a nice looking setup right here. Let's drop down to the 5-minute. See where our entry point might be. Okay, now I want to show you something that we do. Let me pull out this rectangle so we can see better. Notice on the 30-minute, we're getting this spinning top right here. So that's a failure candle showing a possible reversal. I'm going to show you another fibble relationship. And see what we're doing here is we're building a case for an entry. When there's enough things going in our favor, the favor of a direction we're looking at, we can then begin to say, well, you know what, the probabilities are higher that they're going to go the direction we're anticipating than the opposite. Notice we're between the 224 and the 261 extension. 261 is a major retracement reversal. I'm sorry, it looks like I just let me go back here. I have to Looks like I might have, yes I did. Okay. Let's make sure. What I wanted to show you was that 261 is also the 127. Yes, there we go. Okay, so surprisingly enough, the 261 extension off of this move is also the 127%. It's also the top up here. It's also the end of our 167% extension from here. 178 is right in here. So you can see this is a very, very strong reversal zone. Probabilities are stacked way in our favor. Now, how do we enter this? Do we just enter it now because it's hit the zone? You can set a little bit larger stop loss, but to tighten your stop losses, we're going to go ahead with the trend line. Now, this is just a little 5-minute trend line, but the fact is you cannot have a trend reversal without breaking a trend line. So there's really no reason to enter a contra trend trade without first breaking a trend line. However, we have broken trend line, but now we're going sideways. We want to focus on if-then statements. If the market does this, then. I want to see it break the top of this support right here. Once I close below that, then I'll go ahead and take a entry. Now, if you could see the candle, the time right now, we've just opened a 5-minute candle. So I need to wait for this candle to break, another 5-minute candle to open, and I'll go ahead and take this trade on a sell. Now, where are we headed on this? Well, there's two places. Let's look at support and resistance. We have very strong support right in at this point. Let me go ahead and color that. I like to color my price projections green. That's my first price projection. Okay, that is 97 pips. If I enter somewhere around in here, set my stop above the last highest candle, that's 30 pips. That's a 1-to-3 risk-reward ratio. Beautiful trading opportunity right in there. And we have the opportunity of driving all the way down another 150 pips to the bottom of this channel and possibly breaking through it, going down to these lower levels. This is a 38%, this green line's a 50%, and this down here is a 61.8% retracement. Okay, that is it for right now. We're not entering this trade yet. We have to wait until we've broken trend line, but I see a possibility of still going up a little bit higher to hit this 261, which would give us possibly some divergence on the 30-minute, definitely better divergence on the 15-minute. But notice we're at the top of the stocks also on the 15 and starting to point down. So that's why I want to take it if we break through the bottom and close on below this support. But also I want to give it the flexibility to move up and possibly make a higher high and then another trend line break before I take this, just to give us a little better divergence and see if the market wants to flex a little bit more before we do that. So that's it for this part. There's going to be a few more phases to this, and please visit us on the next one and we'll see where we entered it and how we did overall. Thanks for joining me.